All right, crypto fans, buckle up because today we are diving headfirst into the world of crypto, Aussie style. We're talking about the legal ins and outs, the do's and don'ts of crypto assets right here in Australia. And let me tell you, it can be a bit of a maze out there,
Oh, absolutely. It's fascinating to see how this whole new tech scene is shaking things up, even with the old rule books.
isn't it, though?
Yeah.
So, to help us get through the noise, we've got our hands on some prime material, the Australian Securities and Investments Commission's, that's ASIC to you and me, Information Sheet 225. ASIC, for those who don't know, they're kind of like the financial watchdog down here, making sure everyone's playing by the rules. And their info sheet, well, it's basically the holy grail for understanding how Australian law applies to all things crypto,
hmm
whether you're just dipping your toes in the Bitcoin pool or running a full-blown crypto empire.
Think of it like this. This information sheet is your treasure map, guiding you through the treacherous terrain of the Australian crypto landscape. Because here's the kicker. Even if your crypto dealings are as decentralized as, well, a herd of cats on a sugar rush, Australian law still applies.
No escaping the long arm of the law, eh? Even in the digital Wild West.
Exactly. ASIC is very clear on that point. You can't just set up shop in the cloud and pretend Australian regulations don't apply. If you're dealing with Australians or offering these assets within our borders, those regulations are coming for you, ready or not.
No hiding from the taxman, or ASIC for that matter. So where do we even begin? When trying to untangle all this, what's the first thing someone needs to know about how ASIC sees their crypto activities?
It all boils down to one fundamental question: is it a financial product? Answer that, and you'll know if ASIC's regulations apply to what you're up to.
Okay, so that's the million-dollar question. But how does ASIC actually determine if something is a financial product in this crazy crypto world? It's not like they've got a digital magnifying glass, right?
You'd be surprised how closely they look. One of the first things they examine are the rights attached to a crypto asset. We're talking about things like ownership rights, voting rights in a project, even a slice of the profits.
So if my CryptoKitty NFT lets me vote on the future of the project, or my shiny new token promises me a share of the profits from some decentralized app, ASIC is going to take notice.
You bet. The more those rights start looking like those attached to traditional financial products, like owning a piece of a company, the more likely ASIC is to say, hold on a minute, this falls under our watch. They also look closely at how the crypto asset is structured and offered to the public. Initial coin offerings, or ICOs as they're often called, are a prime example.
Ah, yes, ICOs, those crowdfunding darlings of the crypto world. What makes them so interesting to ASIC?
Well, they often involve issuing tokens that come with certain rights or promises of future returns. And that, my friend, puts them squarely on ASIC's radar.
It's all about those strings attached, isn't it? So we've established that this whole is it a financial product question is crucial. But the crypto world is like a giant bag of mixed lollies. You got your Bitcoin, your Ethereum, your Dogecoin. How does ASIC go about categorizing these different types of crypto assets legally?
You're right. It's a bit of a crypto zoo out there, so let's break it down, shall we? Let's unpack the legal definitions of some common crypto asset types in Australia, and more importantly, what those definitions mean for you, the listener. First up, we've got what ASIC calls a managed investment scheme, or MIS for short.
Managed investment scheme that has a serious ring to it. What exactly are we talking about in the crypto sphere?
Picture this. You've got a group of people all eager to ride the crypto wave, pooling their money together, hoping to strike it rich. But here's the thing. They're not the ones calling the shots. Instead of navigating the choppy waters of the crypto market themselves, they hand over their hard-earned cash to someone else to manage. Someone who promises to steer the ship towards those massive crypto returns. That, in a nutshell, is a managed investment scheme.
So it's all about someone else managing your crypto investments, hoping for a big payout.
Exactly. You've got a pooled investment. It's managed by someone without day-to-day control from the investors themselves, and the goal is generating financial benefits for those investors.
Makes sense. So where does ASIC come in?
Paysons is all over it, especially when it comes to ICOs. They're particularly interested in ICOs that operate like this, where investors are essentially handing over control of their money with the expectation of a return.
So if I'm throwing my Ethereum into a project where someone else is calling the shots, hoping for a massive return, ASIC might see that as a managed investment scheme, even if it's all happening on the blockchain.
You got it. And that's where things get interesting. If you're running a managed investment scheme, you can't just fly under the radar. You need to register with ASIC, get yourself an Australian Financial Services License, or AFS license for short, and basically prove you're running a tight ship.
It's all above board, all legit. Makes sense protecting everyday Aussies is a big part of ASIC's job.
Absolutely. Now, let's move on to another big one, securities. We touched on them earlier, remember? Those crypto assets that grant you certain rights, almost like owning a piece of the action.
So it's not just about calling something a share, it's about the actual rights that come with it. It's like saying, owning this token is like owning a slice of this company, with all the potential benefits and risks that come with it.
You're getting it. And those rights might include being able to vote on company decisions, receiving dividends, or even having a claim on the company's assets if it goes belly up. If your crypto asset offers a similar package, ASIC is probably going to label it a security, regardless of its fancy blockchain name.
And when it comes to securities, the word on the street is disclosure, disclosure, disclosure.
You got that right. Transparency is key. For traditional securities, you'd usually have a prospectus, which is like a detailed guidebook for potential investors laying out all the essential information. For ICOs that ASIC classifies as securities offerings, similar rules apply. You need to be upfront about the risks, the financial nitty-gritty, basically everything that's important for an investor to make an informed decision.
No hiding behind complex code or empty promises of riches then.
Nope. Transparency is the name of the game. Now, are you ready to dive into a slightly more complex area?
Hit me with it.
Let's talk about derivatives.
Derivatives. They always sound a bit mysterious. What's the deal with them in the Australian crypto scene?
Imagine you're at a casino, but instead of betting on roulette or blackjack, you're betting on whether the price of Bitcoin will go up or down. That's essentially what a crypto derivative is. It's a financial instrument whose value is linked to the performance of an underlying asset, which in this case would be a cryptocurrency like Bitcoin or Ethereum.
So instead of putting money on a horse, you're betting on the future price of Bitcoin or Ethereum.
Got it. Precisely. In the crypto world, a derivative might involve something called a futures contract. It's basically an agreement to buy or sell a specific amount of cryptocurrency at a predetermined price on a future date. The value of this contract goes up or down based on how the price of the underlying cryptocurrency moves.
So if the price of Bitcoin goes through the roof, the value of my futures contract skyrockets, and if it crashes, well.
Let's just say you'd be wishing you had a helmet. But the key takeaway here is that ASIC sees these crypto derivatives as financial products, too.
So same rules apply, licenses, disclosures, the whole shebang.
You got it. Transparency, accountability, and investor protection. That's what ASIC is all about. But there's another aspect of crypto that falls under ASIC's watchful eye, and that's its use in making payments.
Right. Using crypto to buy your morning coffee or even a new car is becoming more and more common these days.
This is where we get into the territory of non-cash payment facilities.
Okay, that sounds a bit technical. Can you break it down for us?
It's not as complicated as it sounds. Think about the ways you pay for things every day. Your debit card, your credit card, even those online payment platforms like PayPal. These are all non-cash payment facilities. Now, when it comes to crypto, ASIC is particularly interested if it's being used like a regular currency, to buy and sell everyday things.
So if I'm using Bitcoin to buy a pizza, that's one thing. But if a company sets up a whole system where people are using crypto to buy and sell goods and services like it's just another currency, ASIC might start paying attention.
Exactly. If your crypto payment system starts looking too much like a traditional payment system, you might need that AFS license we talked about earlier. It all depends on the scale and how it's actually being used.
So we've covered managed investment schemes, securities, derivatives, and even these non-cash payment facilities, all within the context of the crypto world. It's clear that ASIC is across it all when it comes to regulating this space. But what about those platforms where people are buying, selling, and trading these crypto assets? Where do they fit into all of this? We've covered a lot of ground here, from digital cats on a sugar rush to ICOs. But what about the platforms where all this buying and selling is actually happening, the crypto exchanges?
Yes, the exchanges, they're definitely on ASIC's radar. They see those platforms as potential financial markets and, well,
More regulations. Say it ain't so.
afraid so. If a platform is facilitating the trading of crypto assets that ASIC considers financial products, and we've talked about how they determine that, then they might need an Australian market license to operate legally.
Got it. So even if an exchange is based overseas, sipping virtual cocktails on a digital beach somewhere, if Aussies can access it and start trading, ASIC can still hold them accountable.
100%. ASIC is cracking down on platforms trying to sidestep Australian regulations by operating from overseas without the proper licensing. They're making it crystal clear that if you're doing business with Australians, you play by our rules.
No more hiding behind a .com then.
Yeah.
ASIC's like the digital sheriff in town, keeping everyone in check.
Okay, so let's say I'm a cautious investor, a bit risk-averse. All this talk of regulation or the lack thereof has me feeling a little unsure. Are there any, I don't know, safer, more established ways to get in on the crypto action, while staying on ASIC's good side? Absolutely. You can invest in crypto through established financial institutions and products that are already regulated by ASIC. Think exchange-traded funds, ETFs, managed funds, listed investment companies, LICs. They all offer ways to get some skin in the crypto game.
So I can dip my toes into the crypto waters without worrying about those regulatory sharks.
You got it. But here's the thing, ASIC has some pretty specific guidelines for these regulated entities dabbling in crypto, especially when it comes to custody, risk management, and disclosure.
Okay, let's break those down one by one. Custody first. What's ASIC looking for when it comes to keeping my precious digital assets safe and sound?
Think of it this way, you wouldn't just leave a wad of cash lying around, right? Well, ASIC wants to make sure those crypto assets are just as safe, if not safer. They expect these regulated entities to either have serious in-house expertise in crypto custody or partner up with specialist custodians who know the ins and outs of securing digital assets. We're talking top-notch security measures, offline storage, multi-signature authorizations, the work.
So basically, Fort Knox for my Bitcoin. I can get behind that.
Got it. And then there's risk management. Crypto, as we know, can be a bit of a roller coaster ride. So ASIC expects these regulated entities to have a solid game plan for dealing with those ups and downs. We're talking thorough due diligence on the crypto platforms they use, strict compliance with anti-money laundering and counterterrorism financing regulations, clear strategies for navigating those wild price swings. It's all about being prepared.
So they've got a plan for when the music stops and that crypto roller coaster takes a sudden plunge. Makes sense.
Exactly.
Okay, and what about disclosure? How does that play into all of this?
It all comes back to transparency. ASIC wants those product disclosure statements, those documents that lay out all the nitty-gritty details of an investment, to be crystal clear about the risks involved with crypto. Investors need to know what they're getting into. Plain and simple, no sugarcoating.
No surprises, just the facts. I like
Yeah.
the sound of that. All right, last question. Let's say I've done my homework, I understand the risks, and I'm ready to dive into the world of crypto Aussie style. I find this platform offering a product, and they're calling it a utility token, claiming it's classified as such in another country, implying it's free from regulations here in Australia. Should I just take their word for it?
That's where things get a little murky. What flies in another country might not fly in Australia. Just because a crypto asset gets a certain classification overseas doesn't mean it gets a free pass down under. What might be considered a utility token elsewhere could very well be deemed a financial product in Australia, subject to all those ASIC regulations we've been discussing today.
So no relying on loopholes or assuming one size fits all in the crypto world, especially here in Australia. When in doubt, check with ASIC or a financial advisor. It's always better to be safe than sorry.
Couldn't agree more. This information sheet from ASIC is a valuable tool for anyone navigating this ever-changing world of crypto.
It really is. Well, that wraps up another deep dive into the fascinating world of crypto, this time with an Aussie twist. We've journeyed through the legal landscape, explored the different types of crypto assets, and learned how to navigate this exciting new world safely and responsibly. We hope you found this deep dive informative and engaging.
And remember, this is a constantly evolving space, so stay curious, stay informed, and as always, if you're ever unsure about something, don't hesitate to reach out to a professional for guidance.
Wise words. Until next time, happy investing, everyone.